How would you feel if you could have very valuable financial advice and investment management at a relatively low cost? Does it make you feel relieved? Concerned? Interested? If you worry that you don't know much about finances, but you know you want to start investing, Robo Advisors might be the bridge you need to make that possible. Robo Advisors have made automated investing more approachable. They put your money to work so you don't have to. But what are they? How do they work? And should you even use one? What is a Robo Advisor? Investopia defines a Robo Advisor as a digital platform that provides automated, algorithm-driven financial planning and investment services. But what does that actually mean? Robo Advisors are there to help you make better, more informed investment decisions. You don't even have to be an investment expert. Robo Advisors are there to help bridge the gap and give you information. They monitor, manage, and track financial assets in real time. Using your own metrics like risk tolerance level, price limits, targets, etc., Robo Advisors will generate different financial investment options and strategies based on what you've specified. Let's take a step back for a moment. When it comes to making financial choices, you're faced with complex decisions: reading charts, putting the numbers together, following every corner of the news, keeping up with policy changes, and on and on. The list is just exhausting, especially when finance, accounting, or investing is new to you. Choosing how much to save that will allow you to reach your financial goals, how much to invest, and where to invest it are fundamental concerns in the personal finance journey. Whatever decision you make has significant consequences, not just for your well-being, but also for the well-being of the people around you. The choice of how much you'll spend, save, and invest opens up other decisions that have to be made. First, you have to decide whether you should invest your savings in bonds, stocks, housing, or other assets, all of which come with their individual risks. Determining your risk tolerance is crucial to figuring out how aggressive you need to be while investing. And to top it all off, you have to do all of this while financing your daily life, such as housing, education, and transportation. All of these decisions can be overwhelming for someone new to investing. How they work. How about handing all these choices over to a robo-advisor and freeing yourself up to enjoy the benefits? Just imagine having the best fund manager crunching market data for you 24/7, with you in the pilot seat making the final investment decisions that fit you. Robo-advisors can help bring what you just imagined to reality. Robo-advisors are low-cost, online investment platforms that use AI to create and manage investment portfolios. While traditional financial professionals made the design for the given investing strategies, robo-advisors, which are essentially AIs, manage the day-to-day ongoings. Launched in 2010 by 30-year-old John Stein, Robo-Advisory has made investing easier, more affordable, and accessible to every level of investor, especially beginners and low-income earners. With Robo-Advisors, you can have assets starting with just $100. While traditional investment management gurus and financial experts require you to have thousands of dollars in your account balance, most Robo-Advisors have low or no minimum balance requirements. Also, typical robo-advisors charge 0.5% of assets under management, compared with 1 to 2% charged by many human financial advisors. With robo-advisors, you get to automate your asset allocation, tax optimization, portfolio rebalancing, and access to a human financial planner if you need to. With complete automation and 24/7 online access, robo-advisors can help you get started investing very quickly, just within minutes, even if you're a complete beginner. How do robo-advisors work? As a beginner or a new user, you start with a very simple questionnaire. You have to provide personal details like your age, average income, your investment goals, and risk tolerance level. Your goals can be literally anything, from saving for college expenses, to a down payment on your new home, to investing for retirement. Your risk tolerance level is the level of risk you're willing to take, basically how aggressive you want to be while investing. Robo-advisors can also help you gauge your appropriate risk level based on your goals. This way, you won't get carried away by the excitement of big gains, at the same time reducing your chances of making bad decisions since you have a reasonable amount of risk, a risk level that allows you to sleep well at night, even in a volatile market. Once this information is sorted, an AI builds you a diversified portfolio of exchange-traded funds, index funds, or dividend stocks that match your choice of goals and the risk tolerance level you specified. After your portfolio is set up, robo-advisors correct asset allocation in the portfolio and rebalance it as appropriate automatically, so you don't have to worry about any of that. Should you use them? If you're new to investing and don't want to delay investing your dollars while you study and learn the market, or if you have no desire to learn the intricacies of the market and the strategies involved, they could be a good fit. They could be the perfect vehicle to help drive your portfolio even at a lower fee than traditional investment professionals charge. Robo Advisors are designed to help simplify investing for you and set you up on the road to financial growth. With Robo Advisors, you get the DIY vibe that lets you set your own goals, choose investments and strategies, and invest at your own pace. And you'll typically get to do all of this while paying less in fees. You might be thinking, paying 1% to 2% to a traditional financial advisor sounds small, but when you consider those management fees over a period of years, a seemingly insignificant percentage can add up to a very substantial sum of money in a couple of decades. For instance, your traditional financial expert charges you 1% per annum on a $100,000 investment that returns 4%. This investment would be worth about $219,000 after 20 years. At a 1% annual fee, an investment expert will cost you $44,000, and at a 2%, $88,000. While most robo-advisors will cost you just $11,000, a whopping $33,000 to $77,000 difference. You have to make a choice between going home with $208,000 and $175,000 or $131,000 at the end of 20 years. Now do you see why fees are so important? The other benefit of a robo-advisor? How about convenience? With robo-advisors, everything you need is automated and online. And with one click, you set your goals and watch your portfolio work on autopilot. And if you want to make an adjustment, just log into your account and make that happen, all without making long phone calls or scheduling countless hours of meetings. If you're looking to set and automate good investing habits that can help you in the long run, or you're just looking to buy and hold without having to check in too often, then robo-advisors can be a great solution for you. You can be totally hands-off. You just have to set it and forget it. Robo-advisors can tweak and rebalance your portfolio as needed or specified to get the best performance for you without you doing any research or even having to press any buttons. Finally, robo-advisors are relatively low risk since they use time-tested investment assets like market-indexed ETFs that are known for low risks and consistent returns. You should know, robo-advisors may not pick the next Amazon or Netflix, but they also will not have you take too much chance on more speculative investments like cryptocurrency. We understand planning your investments sometimes seems like a daunting task. On the one hand, you're considering loads of choices, and on the other, the struggle to plan each of those choices and the need to adjust your portfolio at all times. But what if you could automate it all? A robo-advisor could be the solution. Robo-advisors are your smart choice to manage your wealth. They bring investing management at a reasonable cost and make investing affordable, easier, and convenient while letting you focus on doing more of the things that you love instead. Ultimately, only you can decide if you want to use a robo-advisor. But if you find yourself overwhelmed by figuring out what, where, and how to invest, or if you know you won't ever want to dive too deep into the intricacies of investing, then using a robo-advisor like Betterment, Wealthfront, or SoFi could be for you. Thanks so much for watching. We hope you learned something new today. Please consider liking and subscribing to the video. It truly helps us out. And don't forget to hit that notification bell so that you don't miss out on new videos. See you in the next one.